got a huge upcoming week. We have a Fed meeting on the 29th, and we have big tech earnings this week. So if you guys are holding options or holding anything risky, just, have that in the back of your mind that we have a very volatile week and it could swing either way. Quick portfolio update before we get into this. We're sitting at 35,000. I have the same shares here. I got one more share of Apple. I got 5 shares of Qualcomm, and I got 4 shares of AMD. Like I said in my last video, Apple is, it's just looking, almost too good to pass up at this point. Past month, it's down 14%. I think it's down around 15% from all-time highs. And if it has bad earnings, it's going to be even lower. I have 5 shares at an average cost of $223, about $1,100. And I have a 212 put that I've sold. So if earnings breaks down, I will gladly scoop up these 100 shares. Let's move on to my next stock is Qualcomm. Qualcomm is also down pretty heavy from its all-time highs. All-time highs sitting around 227, and we are at 172. I scooped up 5 shares at 174. We still have a lot of room to recover here. And this is actually a dividend-paying stock as well, if I could find it. Dividend yield of almost 2%. So that's decent. I plan to just ride these back up to recovery. These could very well be long-term holds as well, but I love buying stocks at a discount. And I'm sure you guys know about AMD. AMD has had an awful year. I think we hit highs of around I thought it was 227 or 230 or something. 52-week high of 227. And we are sitting at 122. We're sitting over $100 below all-time highs. I think that's 40 to 45% down. AMD's still a good company. Of course, they don't have nearly as a market share as NVIDIA does, but they are still a good company overall. They just got extremely overvalued, and now they've came back down to reality. I have 4 shares at 124, just nibbling in a small position here, about $500. And I believe that wraps up the portfolio update. Still have my NVIDIA shares got called away. I just have this Apple put I sold. So let's get into what the Federal Reserve is thinking about doing. Right now, we're sitting at 4.5% interest rate. We come down to the consensus, it is still 4.5%, and the forecast is 4.5%. So we are expected to basically not change at all, right? So if we don't change, that's exactly what the market's expecting us to do. Hopefully Jay Powell doesn't hit us with some crazy curveball. But I know Trump is pushing him to lower interest rates. I'm pretty sure Jay Powell is not going to listen to Trump, and he's going to make his own decision. He is very stubborn, and he only listens to himself and his little crew of people. I don't think the president has a huge influx on his decision. He's going to, whatever he thinks is best is what he's going to do. So just because if we come in at 4.5% does not mean the market's going to be bullish. He speaks 30 minutes after the report comes out, and depending on what he says is going to affect the market. If he talks hawkish, the market's going to go down. If he talks, bullish, then the market may react in a great way. But that's basically the data that we're going to get on the 29th. And earnings, we have lots of earnings this week. Starting off with SoFi, which is very talked about stock right now. It is sitting at around $18. They have been absolutely crushing earnings all the way up, especially since they broke profitability. They have been skyrocketing. They are expected to get 4 cents of EPS and come in at $678 revenue. That is slightly down from last quarter, but if you go back a year ago, that is up a lot. So $594 in Q4 of 2023, and they're coming out with Q4 of 2024 tomorrow morning. So 594 up to 678. That is insane growth by SoFi. Nothing like props to SoFi. That's insane. So revenue, I guess revenue is supposed to grow at 9%. Oh, I'm sorry. That was last quarter. But if you look at SoFi's past, they have beat, hit, hit. So apparently SoFi doesn't miss. Everyone's pretty bullish on SoFi. They're pretty convinced that SoFi is just going to shoot up after earnings. I'd love to scoop it up at around the $13, $14 level mark, but if it happens, it happens. We also have AT&T in the morning. We have Boeing, Lockheed Martin, General Motors, Raytheon Tuesday morning, and we have Starbucks after the close. Wednesday, we have T-Mobile, we have Progressive, and the close is really what's going to be big. Tesla, Microsoft, and Meta. That is going to be an insane day. If one of these hits and the other two fall, that would be, if they all three tank, then market's not going to be happy. But yeah, this is going to be, Tuesday close is going to be a major day. Let's check out what Tesla's expecting. Tesla, solid growth throughout the years. Tesla's expecting $27.1 billion with 76 cents of EPS. So that would actually be their biggest quarter yet. They've hit 25.1, 25.5. They're expecting 27.1. So that's an insane growth from basically all these other years. And Tesla is known for missing, it looks like. Absolutely, they had a beat and a miss, and then 6 misses after that in the past 3 quarters. So, take that in mind if you're playing anything related to Tesla. Microsoft, great steady growth as well for the revenue. All right, they're supposed to come in at 68.8 with an EPS of $3.12. That is insanely crushing it as well. Insane. 61, 64, 65, and they're coming in with 68.8. So, just from the last quarter, that's crushing it. Over $3.3 billion over the last quarter. That's a 5% growth quarter over quarter. That's nuts. That's absolutely nuts. Microsoft, wow, last year of earnings has been 8 beats. So, yeah, Microsoft is looking pretty juicy right there. I like Microsoft. And Meta. Meta is trading at the lowest valuation. They're trading at around a 29 PE ratio. I think Microsoft was around a 36, and Tesla is just insane at over 100. Not even gonna talk about Tesla. All right, so Meta is supposed to come in right under 47 billion and $6.73 EPS. In 47, are you serious? That is insane. They hit 40, 36, 39, 40, and now almost 47. That is insane. That probably explains the insane price hike in Meta. Not too long ago, they were in like the low 500s or even the mid 4s. So basically, they have a lot of high expectations for these stocks. So just because these stocks hit does not mean they're going to go up. If they have poor guidance, the stock will easily fall. That's really what it comes down to. It's not the beat or the miss. It's all basically the guidance. Wow, look at that. 7 beats and a perfect, what am I trying to say? A perfect middle ground. So yeah, it really just comes down to what they're expecting, That's what it comes down to. And on Wednesday, we have Apple. This is something I'm playing. Apple's revenue has kind of been all over the place, not gonna lie. So this will be what they're battling for. This will be this quarter, so they're coming in at 124.4 with 235 EPS. 124 smokes this by about $5 billion. 90, 85, 94. So this, basically every fourth one is what we're going for. So a $5 billion from last, which is like about 4% year-over-year growth, 4.5% year-over-year growth for Apple on revenue. We'll check out their EPS too, since Apple's a massive company. So their EPS was 218, and now they're expected for 235. That's about a little over 10% growth, I believe. No, I'm sorry. That's about 10%, 9.5, 10% growth on EPS. We come down, Apple has 8 beats. So that's looking pretty good, man. Apple with 8 beats, Microsoft with 7 beats. Yeah. And then Meta, I think Meta had what? Yeah, Meta had 7 beats as well. That's insane. So huge earnings, guys, coming up. And then Friday morning will basically be Energy, Exxon, and Chevron. More like Dow Jones names will be Friday. But the big tech is going to have a massive effect on the market. We'll check out this market here. Oh my gosh. Since I'm on NVIDIA real quick, NVIDIA had a massive red engulfing candle. I got a resistance up here at about 151, 152. Huge rejection from it last time, and we topped out, hit it again, and got rejected again. So huge red engulfing candle. That could lead to some slight more downside or consolidation. I could definitely see us coming back into the 130s, though, after seeing this candlestick. Strong support sitting around the 130 mark. If we break 130, then yeah, I'll have to basically find a new support for this, because then it would start to become bearish. But let's take a look at the SPY. SPY basically hit new all-time highs and got immediately rejected. Yeah, that's pretty much it. We hit all-time highs, which is good, bullish, and then we immediately turned red. So I think it really just comes down to earnings. I mean, that's what it comes down to, earnings and what Jerome Powell says. NASDAQ, we still have not hit our all-time highs back in December. It's like the SPY has, but the NASDAQ has not, which means that money is not flowing into big tech. NASDAQ's big tech. Money is flowing out of big tech and into other names. So keep that in mind. That's what this basically means when the SPY is at all-time highs and the NASDAQ is not. VIX is trading very low. We're not as low as we were. We were into the 12s, high 12s, low 13s. We're sitting at 1484, so there's still a little bit of room to go down on the VIX. But I'm not a big fan of buying at all-time highs. Like if you see me, if I'm buying into my ETFs, I want to buy in at like a 5% discount. If it's individual stocks, I don't mind buying at like a 15% discount or more, especially with good quality names, market caps over 100 billion, stuff like that is what I'm looking for. But yeah, guys, that's pretty much it, guys. Just massive earnings coming up, and yeah, we just have to basically sit through this week. So if you're trading, be careful, don't get burned. But hopefully we see a nice little buying opportunity. Maybe we'll see a small dip, and we can scoop up some nice shares of something. But all right, guys, that's it. Peace.